everyone? Happy Friday and welcome to episode number 25 of the Traders Podcast here from Courage Pays Better Than Fear Trading. I am your grateful and appreciative host, Jeremy Hritz. Very excited that we are hitting that 25 mark. We are 75 away from 100, and I'm going to be with you every step of the way as we push towards that number. It's been a little bit of a busy last week for me, doing a road trip out to Pittsburgh to visit my brother and his family, and then driving out to Indiana to visit my dad and his family. It was a lot of fun, great times. Didn't do too much trading, did a little bit on my phone. Got to see the CPI report come in and its impact on the market. We'll talk a little bit about that. But now I'm back. And we're in the month of June, second week of June. And today's episode is about calling market tops and market bottoms, or calling trade tops and bottoms. And this is something that hits a little bit close to home for me this week, because I was in a trade and, being conservative, took a profit only to then watch it skyrocket to where I missed out on a massive gainer. And the reason why I want to talk about that is because sometimes it's going to happen. It's very difficult to call the absolute tops of a trade, the absolute bottom of a trade. And also, when we look at the broader markets and we're in a big bull run, it's very, very hard to call the very top when things are going to start dropping and the primary trend is going to change, or the reverse, when things are dropping and bottoming out, calling that bottom. So we're going to talk all about that in today's episode. We're going to do Ask a Trader, and excited to do that. And then we'll also take a look at Mr. Roku to see how he is performing. And I feel like I say the same thing. It's Groundhog Day every week for Roku. It's not good. It's not good at all. You want to talk about some bearish engulfing candles, they are for real. Now, before I jumped on here, there was a little bit of bump that was coming in, but it's not looking good, really not looking good for small caps across the board. But with that said, let's get into Ask a Trader. All right, so here we go, Ask a Trader. And I got 3 questions here today. Was teaching my day trading boot camp last night and asked if any of the participants had any questions. And I did get a question about NVIDIA long-term. And I got the NVIDIA hat on, and what my thoughts were on it in terms of an investment. And so I'm actually going to save that question for a mini that will be coming out probably on Saturday. So Mike, I know you asked for that. I am putting that together. So it is the question here on Ask a Trader, but I'm creating a separate mini video for you that will be out tomorrow. So make sure you check that out. NVIDIA did split on Monday. It's now, it was started trading around $120, $121. It was $132 before I came on here. So if you would have bought 1,000 shares on Monday, you'd be up 10K, right? So we'll talk about that. Check out that mini. It's coming. The second question is, how does the stock market typically perform in the summer? And that's a really good question. And I've talked about seasonality several times here on the podcast. Seasonality being, how do markets perform particular times during the year? The winter, spring, summer, where we are now. And there's a saying out there, historically, you hear it in trading circles, it's sell in May and go away. And that refers to that in the summer months, typically people aren't as active in the markets. You have a lower volume, not a lot of trading, not a lot of activity. And that really you just see just some quietness or even a correction during the summertime. So that's typically how the summer is presented. If you take a look at June so far this year, you can see that we've been pushing. We've made new all-time highs off of cooler CPI and PPI. And, I don't necessarily buy into that. There's still money to be made regardless of what the seasonality is. There's always movements up, there's movements down. But historically, and the common perception of how things move in the summer is that it's not as volatile as it is during your other times during the year. The strongest time in the market based on seasonality is typically November through April. We're hitting into the doldrums of the market, right? Those summer months. But I think it's all bogus. You can still make really good money. And I hope you are doing that out in the markets there today. And the final question, what does the Tesla shareholder approval mean for the stock? And so this is referring to Elon Musk's pay package, which had to be voted for again by shareholders. They had to vote on members of the board. I think Elon's brother Kimball, and there were some other things that needed to be voted on, actually moving from Delaware to Texas. This was unanimously approved by shareholders. And what does this mean for the stock? Well, when it was first announced, and it was after market close, it was during post market, Elon had put out some preliminary data that says that the package was going to pass, and you saw an immediate reaction from the stock. It went up and hit around 190. And then yesterday, before the actual event, I think it got up to like 191 pre-market, but then it sold off for the rest of the day, and it bottomed out on around 183. And then post-market, whenever the shareholder meeting was taking place, it got up to around 188, but it has since sold off. And today it got down to about 177. So what does this approval mean for Tesla, the stock? Well, what it means is that the uncertainty associated with that vote is now eliminated. And if there's one thing that markets do not like, or stocks do not like, it's uncertainty, also known as volatility. And so now that that is taken out of the equation, there's going to be a little bit more investor trader confidence in Tesla stock, knowing that Elon is the CEO, he's the man that's got to be with Tesla at least for 5 more years. And so there's some solace that investors are taking away from that, trusting that he's going to be able to build this company up to being more profitable than it is now. I think he said yesterday that he anticipates Tesla becoming a $30 trillion company, which is just stratospheric. So it eliminates uncertainty from the minds of traders and investors. There's still the uncertainty of whether or not he's able to make the company that valuable. But in terms of the stock price right now, typically what you see when you have events like this, you'll hear buy the rumor, sell the news. So the price jacked up. And then whenever it got to the actual announcement that it was approved, you saw it sell off. So what we're probably going to see with Tesla now, we finally got to close above the 100 SMA on the daily. And so we should see it start to push higher. It's been in a downtrend for such a significant period of time. But if it doesn't do that, then we could see Tesla start retesting some of those lows from March and April when it was down in the 140s. That would not be good for the stock. So with this direction that came out of this vote, Tesla should see a rise. How long it will take, we don't know, but it has reclaimed that 100 SMA on the daily. We'll see where it goes from here. All right, so that's Ask a Trader. And today's topic, calling tops and bottoms, and really just knowing when to get out of a trade, and knowing where the top is, or is it possible to even know where the top of your trade is or the bottom of your trade? And the reason why I wanted to talk about this today is because earlier this week, Apple had their event where they talked about their artificial intelligence that they were releasing. It's called Apple Intelligence. And so what I did, seeing this, is I bought some very cheap call options that cost me next to nothing. And I bought a significant number of them. And initially it was a losing trade, because like the buy the rumor, sell the news event, after the event occurred, Apple's value dropped. But then the next day, still holding my call options, there was a massive move on Apple. And as it was running on the first pullback, I ended up getting out of the trade. Right now, it aligned with my plan. I knew what my target was. I had a decent profit. But then what happened from there was this thing continued to climb, and it got all the way up to $220. And I'm sure you've been in this position before where you were in a trade and you got out at a certain price, you got your profit, but then you watch that thing just keep running and running and running. And then the number of the profit that you could have bagged and brought home just looks back at you and says, you got out too early there. And those can be difficult things to deal with emotionally, right? Because you are on the verge of capturing this massive profit and it got away from you, right? And that's where we get into talking about calling the top of a trade or calling the tops of markets or the bottoms of markets, which I'll talk about here in a second. But the thing that you have to keep in mind, and this is why it's important to have a plan, whatever your plan is, if you make your plan work and you see it through to fruition and you hit your profit target, you can't be disappointed or sad by that because you executed the plan. Like this Apple trade that I had. I executed the plan, I took my profit. And regardless if the thing went on and ran without me, sure, that's great, but that's a hypothetical win, right? Because that wasn't in my plan. And it's not every day that you're going to see things like that happen where you get out and this thing just keeps running and running. But you can't beat yourself up over that, right? Because what can happen on the flip side of that is, let's say that you stay in and you let your plan go, you abandon your plan, and then that thing drops, and then you have a loss and not even a win, you're going to beat yourself up. So don't, and this is me, I'm talking to myself. Sometimes I need these messages more than you guys need them. But if you're ever in a situation like that where you have something that you take your profit, you follow your plan, but then it runs without you, it's okay. Because guess what's going to happen? Eventually, and this is all probabilities, trading is all probabilities, you're going to be on the other side of that where you're in a runner and it's going and it's going and it's going, right? And think of it this way. It's just more evidence to show you what's possible in the market, right? Sure, you may not have been able to ride that wave, but you see, hey, it is possible to have a six-figure trade or 5-figure trade, right? Those things are realistic. They can happen, right? So don't beat yourself up. And it also goes into calling market tops and bottoms, because the same thing applies to trade. It's so difficult to call the absolute top of a trade, right? Like with this Apple trade that I had a similar one with Microsoft last year. It's very difficult to say, hey, this is going to be the absolute top. This is where I should set my profit taker. It's almost unrealistic to do that. Maybe every once in a while you'll be able to do that, but even the most amazing elite level traders, which I'm aspiring to get to that level, they're not calling tops, they're not calling bottoms, right? And it's like looking right now at the S&P 500 or the Qs, making new all-time highs. You'll see a lot of people out there who are uber bearish and say, oh, that's the top is in, we're crashing, we're going to zero. It's difficult to call that because nobody has a crystal ball. What we're trying to do is trade on probabilities and what we're seeing on the charts. But it's difficult to say, hey, the top is in, or the reverse is true. When you're in a bearish market and things are dropping and dropping and dropping, it's hard to call the bottom and say, hey, things are going to start bouncing back up. And the reason why that's so difficult is because when you're in a strong uptrend, a strong bullish trend, it's difficult to see that trend reversing and pulling back and dropping, right? Because people get emotional about it and they think, oh, this is just going to keep going up. And because of that emotionality, people load into positions, they keep buying, and that drives the price up. And then eventually, before you know it, before you have a chance to prepare, the market top is in, and then it crashes. And typically market tops are marked by an overconfidence and an exhaustion of margin. And that leads to that crash. We're not there yet, because if you look at the fear and greed index in the market, there's still some fear out there, even though we're hitting all-time highs. The same is true with a bear market. When you're dropping and dropping and dropping, people are so fearful and afraid they don't want to lose money that they can't see the market bouncing and going back up. And so they don't buy and they miss out on huge opportunities. I got off a coaching call today where I was talking with a student, and we looked at the last bear market and how NVIDIA was trading around $101 in October of 2022. And imagine if you would have bought at that point. and rode it all the way up till it hit $1,200, right? Those opportunities come around. But the thing is, to be able to predict and say, hey, market top is in or the market bottom's in, stop trying to do that, right? Go back to what I talked about initially with that Apple trade. Have your plan. Who cares if the market top is in? Who cares if the bottom is in? Have your plan and trade your plan. Sure, it might make your ego feel good that you called the top or you called the bottom, but that's not going to help your bank account. What's going to help your bank account and your profits is having that trading plan, following that trading plan, executing it, and locking in your profits where you said you would do so, right? And eventually, you'll capture one of those big winners and you'll ride it to the promised land. So that's today's topic: market tops, market bottoms, trade tops, bottoms. And now let's take a look at Mr. Roku. And here's Mr. Roku on the daily chart. We can see, look at these just selling that came in here. These big bearish candles the last 2 days. Look at this. Dropped. It hit that 50 SMA on the daily, got up to a high of 60.45, bang, right down. And then what happened the next day? Dropped again. We got down to a low of 53.41. And then what happened today? We dropped down even further. We made a new low, 53.16. We're getting bought up a little bit now. You're seeing some headlines here with Roku. They have a partnership with Fandango. They created the advertising technology exchange. So they have all these things that they're trying to do to increase revenues, but this stock just still keeps sputtering and puttering. And now this next support that we have to watch, because it has made lower lows already, it's that 51.66. And if it takes that out, then we could start coming down into the 40s and into the 30s. And that would not be good for Mr. Roku. So just not a good look. And you can see that we had decent bear volume come in with that. So this move lower might not be finished. And one of the unique things that's standing out right now about the markets is that small cap stocks are just struggling. And we're seeing Roku as being part of that. And until we get some interest rate cuts and some faith back into that happening, we're going to see more of this, and we're going to see Roku continue to drop. So if we just go back to, the last or this earnings gap here on Roku. So it was trading at, what is that? 91.10, and it got down to low 53.07. So it's down $38, 41%. It's in a bearish trend, needs a catalyst. We'll see what happens on earnings. But that's Roku. It's the same story. Groundhog Day every time you turn on the Traders podcast. And, I didn't even put my glasses on. So, I got to put these suckers on. That's why. No wonder why Roku's not going up. Watch, I'm going to put these on and it's going to go up. Here we go. All right. There we go. I think it's the first time I had the NVIDIA hat on and glasses. We're good now. The stock's going to go up. And ladies and gentlemen, that's going to do it for episode number 25 of the Traders podcast. I am your grateful and appreciative host, Jeremy Hritz. Thanking you so much. If you haven't done so already, please subscribe to the podcast, share with your family and friends, leave a comment. It means so. Oh, got a thumbs up on there. That's cool. It must be some AI thing. Maybe send some of your AI love to Roku. But I do appreciate you guys. Thank you so much for joining me. If you're looking for coaching to learn how to trade the markets, reach out to me, couragepaysbetter@gmail.com. Be on the lookout for that Courage Mini coming about NVIDIA and whether or not it's a good investment right now. I'll give you my take on that. And I will see you back here next week for episode number 26 of the Traders Podcast. Have a great weekend and happy Father's Day to all the fathers out there. And happy Father's Day to my dad. Happy Father's Day to my brother. And happy Father's Day to my father-in-law, Steve. And happy father-in-law. Happy Father's Day to my brother-in-law, Scott. So that's it. Have a great one. I'll see you back here, episode 26. Take care, guys.